They're young, ambitious, and totally reshaping the mortgage game. In 2025, Gen Z isn't just stepping into the housing market, they're changing how we think about home buying, credit, and the entire lending experience. Today, I'm breaking down everything you need to know about how this generation is impacting our industry and how we, as mortgage pros, can meet them where they are. This isn't just a passing trend, it's a movement, a generational shift that's going to define the next 10 to 15 years of mortgage origination. Whether you're a lender, realtor, or just someone curious about where the industry is headed, this episode is for you. Let's start with the numbers. According to ICE Mortgage Monitor, Gen Z now makes up 1 in 4 first time homebuyers. That's a massive shift. We're talking about folks between 23 and 28 years old, a group raised on smartphones, social media, and instant everything. What's driving them to buy now? It's a perfect storm. Rents are out of control. Remote work means they can live farther from expensive cities. And for many of them, financial uncertainty from inflation has pushed them to prioritize home ownership earlier. But they're doing it differently. They're not just chasing the suburban dream, they're co buying with friends. They're purchasing multi unit properties to house hack. They're living with parents longer to save and strike. The time is right. And let's not forget, they've watched the 2008 housing crisis from front row as kids. Many saw their parents or relatives lose homes or struggle with equity. That leaves a mark. So they're cautious. They ask more questions. They want to understand everything about ARM versus fixed, DTI, LTV, even if they're just learning acronyms. Now, let's talk about how they expect to interact with us. Gen Z was raised on apps and automation. They're not looking for a 3 week document collection slog. They want a frictionless experience. And here's what that looks like. They expect pre-approvals via app, doc uploads from their phone, text message updates, not voicemails. They research mortgage info on TikTok and Reddit, and that's where they're getting educated. And that's where we need to show up too. Gen Z prefers asynchronous communication. They don't want to hop on a call unless it's absolutely necessary. They'd rather you shoot them a Loom video explaining the next step or a 60-second TikTok that breaks down DPA programs. This isn't just about being trendy, it's about respecting their time and delivering content in formats they trust. If your lending process involves paper forms, fax machines, or waiting on email threads, you've already lost them. Gen Z wants real time, mobile first, clear status tracking. Period. Here's a big update for 2025. The FHFA now allows Vantage Score 4.0 for mortgage assessments alongside traditional FICO scores. Why does that matter? Because Vantage 4.0 considers payment history on rent, utilities, and cell phone bills, not just credit cards or installment loans. For Gen Z, many of whom don't have long credit histories or tons of credit cards, this opens the door to homeownership. This score model is much more inclusive and reflective of how younger consumers actually spend and manage money. It rewards responsible behavior in areas FICO traditionally ignored. That's a game changer. What's more, this means we, as lenders, have new opportunities to qualify borrowers who were previously locked out. It also means we need to retool our underwriting conversations. The borrower who pays their rent on time, who never misses a phone bill, who's great with budgeting, they deserve a shot. Now, it's not all smooth sailing. Gen Z still faces serious challenges. First up, down payments. Many are leaning on family gifts, grants, or co-buying to get in. A lot are using state and local down payment assistance programs, but don't know where to start. They Google it, sure, Well, what they need is clarity and confidence. They want to know, is this real? Is this legit? What's the catch? Second, student loan debt. It's a weight around their necks. And even though income driven repayment plans have helped, these loans still impact debt to income ratio and psychological readiness to take on a mortgage. The mental load of carrying 50,000 in debt changes how you look at big purchases. Third, lack of financial literacy. Gen Z knows how to Google, but they crave real guidance. They want someone to break it down for them in quick, bite sized ways. Think short videos, explainers, visuals, and checklists, not a 10-page PDF. They want voice memos, screen shares, and plain English. So the big question, how do we win their trust and their business? Number one, speed and transparency equals trust. If your system can pre-approve in hours and show them what's next in plain language, you're ahead. Number two, mobile first intake. Build workflows that don't require laptops. Use text automation. Offer dockless options where possible. Number three, be where they are. Partner with local creators. Post short form mortgage tips on social. Turn your FAQ page into a reel. Number four, flexibility in products. Think 2-1 buy downs, second look programs, or income based pre approvals. Show them you're flexible, not rigid. Number five, community. Gen Z wants to support businesses with purpose. Highlight how you give back. Talk about your community work, showcase your values. That builds loyalty. Gen Z is here, and they're not waiting for the industry to catch up. They're ready to buy. The question is, are we ready to serve them? The lenders who listen, adapt, and lead with speed, empathy, and tech, those are the ones who will thrive in 2025 and beyond. If this video helped you see things differently, hit like, subscribe, and drop your questions in the comments. Let's keep the conversation going and keep reshaping the future of mortgage lending together.